And one of our goals is to share, right? It's always good to give rather than just receive. And that's what Community CPA wants to do. And we want to give. We want to give our time and the knowledge. And today's topic, it is the LLC, the Chameleon, that the little snake-like thing change colors. Remember that thing? I have seen that in Omaha Zoo. And so Chameleon, and I always try to call it Charmeleon because, English is not my first language, but it's Chameleon. And so the LLC, the Chameleon. So we are going to talk about that. My whole goal today, I was hoping if I did a prayer before I get online, I wanted to be able to make the complex concept easy for whoever here today with me. And I want to give you that knowledge. And just about myself, my name is Ying Sa. I am the managing partner for Community CPA. And Community CPA has been on market since 1998. So how many years is that? It's like 24 years. Okay. And I serve on that National Taxpayer Advocacy Panel, and the people knows about this. And this is a Federal Advisory Committee and to provide input to IRS. Of course, the advice we are getting are from grassroots, is from you. So anything that IRS is supposed to improve and making you happy, you're the taxpayer. IRS said taxpayer first. So if you have anything that IRS should improve, bring it on and I will pass it to the IRS. And of course, there's other people's working with me. We're all on the committee and, doing that volunteer work. And of course, my book. Today, I'm going to talk about my book because I have two very good examples in my book that will give you a understanding of this webinar as well related to LLC. And no responsibility disclaimer because I am just not perfect. I'll tell you that if someone really get me very upset, I'll say I'm perfect. But in reality, no. Nobody is perfect. I make mistakes, you make mistakes, but that's okay. So we just want to make sure that we take knowledge to ourselves responsibly with a grain of salt, right? So know that you are learning from other people. That doesn't mean the other person is the authoritative speaker. Only IRS website, irs.gov is authoritative speaker. And even though they are authoritative, they are sometimes coming up with measures late. They are sometimes having conflict information in different areas. That happens. That's how they improve, right? That's why the tax people will never be out of job because they keep on changing. The president come on board. That's like part of their things to do is to change IRS, to make it different. So that's what they do. All right, so now let's go to talk about LLC. Someone came to you, said, I have a partner. What does that mean? What does that mean? Does that mean they have a partnership? Does that mean they are partners? So here, what does that mean when someone in business said to you that I have a partner? And basically, they give you some interpretations. Depends on in what circumstance they say that to you, right? So that could mean that, oh, I cannot make decision because my partner has the right to decide with me. Or says that, oh, I cannot make decision because my partner can only make the decision. I'm not that important, okay? So that is one way you hear I have a partner. But also you could hear I have a partner by saying that I don't have so much money and I have to split my profit and to my partner. See, partner comes in again. Then in what case that can come up also? Oh, my partner is responsible for the debt, not me. Oh, I'm so sorry. We owe you, but I'm not responsible. My partner does. Only he does. And see, that comes in again with partner. So when people talk about I have a partner, what kind of tax structure they are under, like what kind of tax they are filing, do you know the answer? You don't know the answer unless you are me working on their business and doing their tax planning and the tax filing. I know, but other than that, people don't know, right? You don't know whether that is LLC. You don't know whether that is LLP, and you don't know S Corp, C Corp, whatever, 990, right? So I have a partner has been really casually used by our talking. And it could mean that I have a member, I am a member to an LLC, could mean that I am a partner to a limited liability partnership, could mean that I am a shareholder of an S corporation, could mean that I am a shareholder of a C Corp, and I have other shareholders with me. So people are casually using the term on a partner. And we don't want to get confused with them casually using the term. So we want to really understand what is partner and a partnership. Hey, Ying, I'm so confused. I have an LLC. Am I a partnership? No, you're not. Okay, let's go through this concept really quickly. It will get you there. I'm not doing much of elaboration right now. I'm just simply reading it very quickly because quite a few folks of, those are attending my webinar, and especially they're listening to on the Facebook or on the YouTube. They're driving, they're listening to me. And so I am going to read a couple of concepts for you. Okay. So general partner, I want you to know the term of general partner. What means general partner? A general partner is a partner who is personally liable for partnership debts. So clear. General partner responsible for what the partnership owes to the outside. General partner has a liability. So general partner is really, really important. Sometimes the partnership could only have 1% of the partnership goes to the general partner, but general partner is the one responsible for every debt. Got that? So understand, just keep the hard-coded that term into your head. Okay, it is a general partner means someone responsible for all the debt. Limited partners. A limited partner is a partner in the partnership formed under a state limited partnership law whose personal liability for partnership debts is limited to the amount of the money or other property that partner contributed is required to contribute or is required to contribute to the partnership. What does that say? That says limited partner only responsible for the liability to a degree, to a limited degree. So what is that degree? That degree is how much they put in or how much the partnership require that person to put in, right? So limited partner, just limited liability, limited debt responsible. General partner responsible for everything, right? Okay, now there is a 3 partnership I want you to understand. So we're talking about partnership, right? We're also talking about limited liability, company, LLC, all right? And we're talking about this chameleon, just change colors, getting us really confused. And I'll tell you, I'll identify the body of the chameleon to you so you know what I mean by chameleon changing colors, okay? So general partnership is composed only of general partners. So that means you got 5 partners, they're all general partners. So that is called general partnership. See, that is a body. That is a body of organization, but with the same kind of people, they're all general partners. So that means what? Every single one of them are responsible for all the debt of the partnership. All right, limited partnership. A limited partnership is formed under a state limited partnership law and composed of at least 1 general partner and 1 or more other limited partner. Got it? That happens a lot. That is a lot of partnership formed. This is a limited partnership. They give 1% to that general partner, then the rest of it is all limited partners. All right, see, there are 2 types of partnership already, right? So a lot of time you only see these type of partnership is sort of in the professional service area. And, I'm generalizing it, but this is most often seen, okay? Limited liability partnership. See, we were just talking about limited partnership. Limited partnership means you at least have one general partner, the other one is a limited partners, right? But limited liability partnership is formed under a state limited liability partnership law. Generally, a partner in a limited liability partnership isn't personally liable for debts of the LLP, the company, or any other partner, nor is a partner liable for the acts or omission of any other partner solely by reason of being a partner. What does that mean? That means that the limited liability partnership, let's say, is a law firm, okay? And so this law firm, one lawyer doesn't responsible for the other lawyer's mistake. And, one lawyer doesn't responsible for the partnership's liability just because he is a partner. It is a limited liability partnership. So you see that a lot. It's abbreviated as LLP. Have you seen some partnership? Have you seen some law firms? They give you an invoice and then their name is LLP. Heard of that? Seen that? That's why. Okay. So now let's talk about limited liability company. So people goes, is that a partnership? No, it is not. But why we keep on confusing that with a partnership? I know why. That's why I want to identify the chameleon's body, the dead body, no, the live body, the body that changes color and to you. But it's coming in the next few slides, okay? But I want you to follow me. A limited liability company is an entity formed under state law by filing article of organization as a LLC. Unlike partnership, I'm reading, none of the members of a LLC are personally liable for its debts. What does that mean? That means LLC go out, borrow $10 million. None of their members are responsible for the $10 million. But of course, if you put on personal guarantee, you're responsible. I'm just talking about if it is LLC's debt, members are not responsible. An LLC may be classified for federal income tax purposes as a partnership, a corporation, or an entity disregarded as an entity separate from its owner by Form 8832. This is not a, talking about English is my second language. I'm telling you, even the folks who grow up here in US, and these kind of English are no English, they are weirdish. They're not English, right? They're just languages that doesn't even make any sense. And I actually copy and pasted from IRS website. So I'm not being creative to create Chinglish or weirdest, whatever language I make for you. But it is, the LLC may be classified all kind of things. Now, one thing in common though, between the LLC and the partnership, IRS automatically classify both LLC and the partnership as a disregarded entity. Did you hear that? What does that mean? That means IRS will close their eyes to make you file taxes for the LLC or partnership as a Schedule C. Look, I give you the form of Schedule C right here. And this profit and loss from business, this is where you can put your LLC filing here too. Automatically disregarded entity. This means that the owner reports their share of company profit and losses on their personal tax return. Okay, so the IRS automatically, without thinking, goes, you report over there. Okay, if you are, right here, when they say disregarded entity, there's two ways to express it. It's almost like expression variation, okay? You can express your gratitude to someone with a gift. You can also express your gratitude to someone and with a hug. During the pandemic time is a virtual hug, right? So the expression is different. So disregarded entity expression is also different. Can come from K1, can come from Schedule C right here. So in what case it's going to be a Schedule C? In the case where you have single person as an LLC, like single member LLC, heard of that, right? Or in the case of your husband and wife, you are in same partnership, you decided to put that in here for yourself and under Schedule E or Schedule C. So just remember, it is one thing in common, both partnership and LLC, it can be expressed differently through directly reporting on 1040 or through K1. Make sense? All right. So LLC is not a partnership. That is what we want to clarify. Although many LLC owners casually refer their co-owners as partners, business partners, okay? But they are actually formally known as members. And both LLC and partnership are created by filing forms with the state, okay? So that's sort of, okay, we all go to state to formation, but that doesn't mean they use the same chapter. So they use different chapter with each state to form either LLC or partnership. A LLC doesn't require general partner. Instead, it can be managed by its members or by a group of members, and with other members acting as a passive investor. So important here. Later on in this webinar, I am going to draw you a story, and I'll give you that passive investor picture. And you will know what I mean by that. It is really important to know, okay? The LLC operates according to its operating agreement. And just hear me reading this, is very important. A document that includes such things as how profit and loss are distributed, capital contribution of each member, how decisions are made, and the procedures for adding new members, dealing with losses and departures. Look at that. So it is a Bible of how you're going to run your business. And when you have such agreement, this is what IRS will ask you when they audit you LLC. Okay, a LLP governing document is a partnership agreement. It's not operating agreement. Okay, and all partners can participate in running the company, or some partners can be silent partners who are simply the investors. Same concept, folks. Tax treatment is also the same. So we will talk about that. In general, a LLC offers better liability protection than and more tax flexibility than partnership. True and true. That is true. So I want you to stay on, look at my example, understand why I say that's true. All right, let's go to why LLC is Chameleon. That is a cute chameleon I found on internet, the cutest one. The other ones, they look purple and colors are not right. And this chameleon is matching to the branch that he or she is crawling. I don't know whether you can tell the genders by just looking at the look of the chameleon. Of course, we can tell that from, some species can show that really, really well, but not sure about the chameleon. And maybe the male one should have 2 horns and the female one just have 1. I'm just kidding. I just want you to now refresh your mind. And, now we are getting into a place where we say why LLC is chameleon. The reason we say LLC is chameleon, because LLC, the word of LLC doesn't tell you anything. It doesn't tell you whether they are filing, whether they are a Schedule C under 1040 or their partnership return under 1065. Who knows? And maybe they file 1120 as a C Corp, they are C Corp, they're S Corp, and they are a nonprofit organization. And all of that is possible with LLC, folks. So when someone tells you he has an LLC, it means nothing. And sometimes I have folks coming to me goes, I am paying so much taxes. Why who and who also have LLC doesn't pay any taxes? I don't know. And I don't know what they do with their LLC. Who knows? Maybe they just didn't run a good business, or maybe, and they are just running a good business, but had a structure in such a way that the LLC doesn't really trigger any taxes to anybody, right? And about LLC filing, and this is where I want to identify the body of Chameleon. The Chameleon body we just saw on the earlier picture, and this 1065 is literally a body of the Chameleon. This is where, because it is so flexible and the LLC could be elected to be so many things, so they don't use this 1065 form at all. They use something else. So it is really confusing for people to think that, well, I don't know, I have LLC, I have LLP. And I mean, some people even said that I am actually a C Corp. I'm so confused. Don't be confused just because LLC is one of those structure that is like a chameleon. It changes. So entity formed as LLC that are classified as a partnership for federal income tax purposes have the same filing requirement as a partnership. This is just one color of that chameleon. So basically, if you have an LLC, you are not doing anything, and you have a multi-member LLC, and you are told by IRS that, okay, we don't have a form for LLC, you're just going to use partnership return. So that's why you came here for 1065 for partnership tax return. So you are running your tax stream like a partnership return, and you identify your members. All right. So your members, there's some members are what? Investors. Remember the slides we were talking about? Okay. But some of the member is active members. They're like working there, right? So now this is the right time. This is a good time for us to go into the story in my first book. I didn't talk too much about my first book in most of my webinars because I really expected you already read my first book. I'm just kidding. But this time today, and we have to, because we have two stories I want to elaborate the concept of LLC and to really honing to home of what exactly that means when you have an LLC. So I actually have my book right here. And so I am going to read you the story of Leo and Francis. After I finish reading it, then we will be going into a drawing. And I want to draw you out to know what exactly Leo and Francis were doing, okay? So that's on page 115. Let me find that page right here. Okay, so Francis and Leo were two partners in real estate business. And Francis was in his late 20s. Leo was about to retire and in his 60s. They met at the local tequila bar where most of subcontractors would go to drink after work. Francis noticed Leo a couple of times. Leo wore expensive outfit and was a little bit off tune from this crowd in the bar. But a couple of Latino folks would say hola to him as if they all knew him. So Francis decided to say hi to Leo one of these days. After a couple of drinks and a couple of hours hot chat, Leo put down a $25,000 investment and Francis identified a couple of rundown homes. They were going into LLC together to flip houses. Leo just want to get a return on his investment and would not get involved with actual labor. In fact, he just wanted to stay in the bar and find more people like Francis to do more deals. He had already been so successful in finding partners, see, casually partners. That would be his 8th partnership with a new partner. So Francis is his number 8 partners. Okay, so now let's just go into the tax part of the partnership right here. So in the book I wrote, Francis was so talented in fixing an interior design. He used the $250,000 to buy 3 broken homes. Within 18 months, all 3 were sold, fixed, and sold in 18 months. After covering all the material expenses and a guaranteed payment to himself, as he was the one who did the job, the net profit was $98,000. 46 went to Leo. And with Leo, 46,000 profit, that is 18% of rate of return. The benefit for Leo to be this kind of partner was that his gains were only subject to income tax, not self-employment tax. That was a solid 15% of saving on taxes, which for Leo, the one who is an investor, and he saved $69,000 taxes right there. For Francis, the $46,000 would be taxed both on income and the self-employment tax. On top of the guaranteed payment, he needed to pay both taxes as well. Yes, when you made money, paying taxes was like the seal of your victory, right? In a most authoritative way by saying, I paid my taxes, right? So that is a story of Leo and Francis. Now, let me stop sharing the slides with you, and I want to go into my whiteboard to draw you how that partnership works. So you see, I already know you're going to be here. So I wrote, Happy Saturday. It's Saturday, folks. Why are you here? I mean, our topic could be boring. So I choose the color. Blue just matches to my scarf. Okay, now let's go. So Leo and Francis. Oh, Francis. So they formed a LLC. Let's call that Flip LLC. So in this LLC, they had agreement. There is actually 3 things need to come in, and this is all should belongs to what? Operating agreement. Remember, we were talking about in the LLC, we should have operating agreement. In the operating agreement, very importantly, we need to identify ownership. And we need to identify what happened if we have profit. And we also need to identify what happened if we have losses, right? So now, remember in this deal, and Leo came up with $250,000 investment. Francis came up with what? 0. And he just spending money and the labor, right? So he working. So now, remember we made $98,000 profit. Remember that? So in this case, we need to deal with what happened to the profit. Now, in this particular agreement, Leo and Francis at the tequila bar, they decided the ownership is 50-50. They also decided the profit, when the profit comes, we split 50-50. What I didn't write in the book is that they also decide if they have a loss, let's say the houses didn't get sold in 18 months, Then they changed their mind and they were like, what gonna do? Let's rent it out. So they start having expenses and losses on the book. If that happened, what do? So their agreement is Leo has 90%, Francis has 10. So in the story, we said that that's a $98,000 profit. So Leo had 46K, Francis has 46K. And in Francis' tax return, and he has, I wrote that wrong. Let me correct it. I started with a W because I was almost going for what? W2? Yeah, no. So Francis has, this is LLC. So this K1 of the LLC coming into Francis and Leo. So in Francis' tax return, he has a K1, 46,000, but his 46,000 folks need to pay two taxes. One is income tax. The other one is self-employment tax because he worked it, right? But what about Leo? Leo got K1, 46,000, but he doesn't need to pay. He only pays income tax because he's just an investor. He's passive. He did not work. So he's purely getting that money like investment, like interest income. So he only pays income tax. But of course, Leo, you know Leo, he's dressed expensively. He's going into tequila bars to use up his money to make interest income, make investment income, capital gain. So he actually have other incomes, right? Other incomes in his tax return. So maybe his income tax rate is higher. Let's say it's 37%. But for Francis, remember he also received guaranteed payment. What is guaranteed payment? It's like the salary, right? Because he works. So it's not like if I don't sell the house, I don't get paid. And Leo, Francis has to eat. So he actually got something promised to him. So that one is also coming in as an income, also pay income tax and self-employment tax as well. So all of Francis' income, let's say that added up to be 90K, then it is all subject to these two taxes, right? So this is where I want you to know that being a partner casually actually is the member, right? Being a member inside of an LLC, and you will have the flexibility to make an operating agreement for each of these items. So let's say if we give some more drinks to Leo, then Leo probably have money and would agree to something even better for Francis. And they did a couple of drinks, but not enough. Leo was not drunk. So, you know, the deals is not super beneficial for Francis. But let's say Leo's drunk and he gave 25,000, but he also said that, oh yeah, Leo, and ownership is still 50-50 because I really did give you money. But if I made profit, if we made profit, I am going to just have 10%. You can have 90%. And that immediately will change the picture, right? 90% of 98,000 folks. And so that would give Francis a lot more money. And we're talking about 88,200 to Francis. And then the rest would go to Leo. $9,800. Then Leo would not make that much profit anymore. Remember, Leo's rate of return was 18% earlier. Then it'll be much less because it's only 9,800. Then Francis would end up with so much more money, right? Of course, more taxes, but you know, if we made money, we don't mind to pay taxes, but we want to make sure we make money first, right? So here you go. And Francis actually got more. See how that negotiation can be under influence of tequila a little bit more, right? So this is where, and you will come in to really work on the operating agreement. And this taxes is filed under 1065. It is literally partnership tax return. That's why you really cannot look at 1065 goes, oh yeah, we're partnership. No, you are not. You are a company. You are a limited liability company. And you literally can turn this LLC to file 1120 or 1120S, or you can even file Schedule C under 1040. You see how your LLC can be such a chameleon, right? And it can change into different colors immediately right away and with the election. The process of moving LLC into these kind of ways, the word we use in English is election. It is not the same, is not as serious as a presidential election, or you say it is not, so it is much more serious here than the presidential election, right? So either way, and it depends on how your experience goes. So here goes the Leo and the Francis story. Isn't that cool? That makes you understand something, right? And now let's go back to my go back to my slides, because I still have one slide I want to show you. So now this is the Leo and Francis story, and let's look at James and Sneha's story. James and Sneha, okay, how they did it. This is a LLC again, okay, and it is a couple, James and Sneha, and they own a hotel. So let me find the book. It is on page 117. Okay, so let me read this. And this is me telling story in the book. So I said, we have a husband and wife client who runs hotel under LLC. They are Sneha and James. James and Sneha owns the hotel under the LLC. So this is where I laid out this story. They usually, at the end of the year, have a $500,000 profit. It goes into their 1040. Okay. And before they came to us, they paid income tax and self-employment tax on the income and on the total income. So it's a K1 for James and a K1 for Sneha. So coming into their tax return and pay taxes, pay income tax, pay self-employment tax, because they own the hotel, right? So when they came to our firm, I asked Sneha, so what type of work do you do in the hotel? And Sneha answered, I don't go there. It is just my husband's job. What did he say? I never go to the hotel. That's her answer. So what does Sneha answer tells you? She never sweat, and she doesn't work at the hotel, and she should never need to pay self-employment tax. And there is a 15% of half the $500,000, which is 250,000. And we're talking about saving for the 15% of self-employment tax on Sneha portion. And it's 37,500 every year for Sneha. This is an example of how your partnership casually can be structured. If both you and your partner doesn't sweat, you should never put yourself in a situation where both of you paying self-employment tax. See? So now let's look at what James and Sneha's deal was. And I am going to share the chart with you again. And let's go to my whiteboard. Okay, so we will clear this drawing. All right, so what we have is, this is the hotel company. This is a hotel LLC. And because they're couples, so their operating agreement is pretty straightforward. So from the ownership, which is the equity, to profit, to losses, and all the way 50-50. Because they're husband and wife, different from Leo and Francis, right? All right. So now, and you got profit, $500,000 each year. So half James, half Sneha. And with Sneha, and she is not working. She's a housewife. And she gets her K1 for $250. How do we treat that? You will treat that as an investment income. Did you see what I did? Okay. All right. My hand is touched some button. You will treat it as that. But for James, he's K1. How do you treat that? He works in the hotel every day. So it's treated as a self-employed income. So he pays 2 taxes, income tax and a 15% of self-employment tax. Okay, folks. So there, you see how you have a LLC, or if you have a partnership, it is important to decide what function you are. Are you a active person who works in the partnership or LLC, or you are an investor? Because the tax is different. And remember earlier, we also talked about on these entities, the liability is different as well. And if you are a partner, general partner, you are responsible for all the liabilities. So if your partnership fails and you decided to take on the liability, the losses that you have, and you have to own up to it. If it is not your liability, you didn't really have a loss. If it is not something that you would otherwise have to pay, or you pay the losses, you pay the bank, you lose the money, then you can claim the loss, right? So your losses, you don't even entitle to the loss if you don't own up to the liability, right? So these 3 items, it is the most important item in the operating, in your operating agreement. So make sure that you have that organized. So now when we talk about LLC, do you feel a little more clear about what we are saying right here? So number 1, you need to remember, LLC is not the same as a partnership. And a lot of people get them to be the same because they are casually speaking about their members as a partner. So fine, okay? So that's fine, you express it that way, but they're actually all members. They're not partners. And number 2, they use partnership tax return. So that makes it even worse, right? That makes it even so confusing because it is just, well, how could you say LLC is not partnership? They're using partnership tax return. Yes, they're using partnership tax return, and that is what IRS decided, but that doesn't equal them. And LLC also don't have to use partnership tax return. It can be elected to be different kind of chameleons, right? Different colors. So that's where the LLC flexibility comes. The LLC have the flexibility of a body colors. They also have a flexibility inside of themselves to decide how the operating agreement would be. So I always tell our folks that LLC is actually one of the most complex tax return and entity anyone who owns it. But a lot of times when you start up a new business, you go to the attorney and they recommend you LLC immediately. They have a reason to recommend the LLC because it is easier to manage. It has a lot of state law around it. So if you get lawsuit and you hire the state lawyer to fight for you because they're licensed in that state, so they can practice that with your entity. And so it's not the same. It's not the same as a corporation. So with that, I want to conclude our today's webinar by saying that the LLC is a chameleon. Chameleon in both ways. Number one way, the color they changes because they can be all kind of entity they want to be. But the other things, they're chameleons. It's also because they can stretch their three key components in such a different ways. You can customize them. You can decide on what to do. You know, if I am a Leo with 250,000 stake in this LLC, and I want ownership to be 99% of mine. Fine, you can do 99% Leo, 1% Francis, okay? And if James and Sneha happen to file a divorce, and then they don't want to operate together anymore, and then there you go, they had a 50-50 ownership, then suddenly, and through the divorce, that ownership can change, right? And or maybe Sneha goes, yeah, you can have the ownership, but I want, 50% of profit share still. I want the 50% profit. For losses, I just want 1%, you have 99%. So see, those can be negotiated through significant event. So the attorney would come in, making new operating agreement. When IRS come in to audit you, they will ask you for that operating agreement because that's how they can decide whether your share and your reporting of income is accurate. All right, so with that, I think we conclude today's webinar. And I hope I have accomplished one single goal, which is to articulate LLC a little, articulate this complex animal to be something understandable. And I think our firm, we have a reputation of don't speak proper English, right? I don't speak proper English. But because of that, we actually really care to speak a language that you get. So we're simple and we're plain. We have no jargons and we have no secret either. So you just learn what we know. And I hope this has opened up your eyes. So now when you look at LLC, it's not a partnership. And when you look at LLC and you start to file your tax return, you understand the members can be treated differently. Okay, I actually have a question. Someone raised their hand for question. So let me see, do I have that question here? Okay, that makes a lot of sense. A rewatch helps to learn the depth of webinar even more. Yes, they're saying that to rewatch this webinar. What is the difference between a partner and a shareholder? Great question. So a specific, more accurately speaking, folks, partner just means the owners inside a partnership, okay? But members means the owner inside of LLC. So shareholder means the owner inside of a corporation. Does that make sense? But in real world, we kind of simplify them so badly. Everybody is partners. But just keep in mind what I just said. Partners is owner inside a partnership. Members is the owner inside of an LLC. Shareholders is the owners inside of corporation, whether it's S and whether it's a C corporation, okay? And I hope that concludes our webinar. And thank you, folks. I really hope that I have delivered some useful knowledge to you. And give me a thumb up on my videos and go on Google, give us good comments. And we always, those are actually energizers for us. When you do that, we feel so good and we love ourselves. Who doesn't want to love themselves, right? So let's do that to each other so we all love ourselves. All right. Bye-bye. Have a great weekend. Bye.